Okay, I think we are live. Yeah, so welcome to Crypto Pulse Weekly, our weekly assessment of the markets and analysis of the technical indices and general sentiments. As usual, we'll go through a brief overview of what's happening in terms of the environment, the market environment, and sentiments. And then we'll go to a bit of technical analysis. Today's call is going to be quite short because I've been busy throughout the week. I've not had time to really look at the market. But from the look of things, we might be gearing up for a very interesting next month from what we're seeing now. So let's get started with market updates as usual. So after the drop back to 38K, we observed that Bitcoin has failed to break 40K. Why is that important? I will explain why that is important when we're talking about the technical analysis. For anybody that was here last week, I mentioned that I think the local bottom was in at around 33K, and that we've not been able to break back to production cost of Bitcoin since then, meaning that we're not likely to be able to break lower than that. On the back of that, we've seen that we've persistently stayed above 40K pretty much throughout this week, really. Yeah, throughout this week, we've stayed above 40K, essentially. And each time, the markets come back, we've pushed up again. Why is this important? This is important because this week was supposed to be the most important week in the month of March. This was the week there was interest rates talks by the US, interest rate talks by the British government, the Bank of England. There was all sorts of stuff. There is still the war going on, all sorts of sentiment and bad news flying around. And despite all of that, we are still seeing Bitcoin holding its ground. I think it's very, very significant because I think it's a sign of things to come. In other news around regulation, we saw that, the rate hike came to 0.25. That of UK now, I think, is 7 point something. I can't remember, but they did. The rate was as expected. There was an expectation of the rate, and that was exactly what happened. Then there was also this news about the EU trying to ban proof of work. As a result, people were thinking that it was going to affect Bitcoin. But really, it will have only been the EU users that will have been affected. There will have not been any impact really on Bitcoin itself. But again, that vote happened on Monday. Nothing happened. The vote was shouted. How do I put it? The vote was killed, essentially. It didn't go through. So in terms of sentiment, I think our sentiment has flipped bullish. We will need a bit more confirmation, and as I'll show you on the chart, we need a bit more confirmation to fuel the bull engine. But I think sentiment is bullish. I'm just looking. So I have a third screen, and I'm looking at the third screen. I have the Bitcoin chart, daily chart open, and I'm looking at it again. I'm thinking to myself, yeah, I think sentiment is bullish. We will probably need to prove ourselves at 46 and 48K. If that is broken, then essentially if we flip 49K, then we are heading very soon to all-time high, because then we'll have made higher highs in terms of the daily chart. But that's what it looks like. In terms of what's happening, I think we've come to the end of the bear season that started pretty much in November. And it's been very nasty, but I think we've come to the end of that season because of the stability again around 40K, and because of retail accumulation. One other thing I missed out here has been what you call on-exchange balances. On-exchange balances are the amount of Bitcoin really that you have on exchanges across board. There are matrices that companies use to gather this information. And what it shows is that exchange balances have been running low for the last 39 months. That's over 3 years. Yeah, that's over 3 years now. So again, it's plunged to another low. And what this suggests most of the time is that there's accumulation going on. And if there is no whale that is selling all of a sudden, then you see the exchange balances keep going down. And two things happen when exchange balances go down, by the way. One is that it means that there is less Bitcoin in circulation to sell. And it means that if there's a surge in demand, sudden demand, there's going to be a rapid price hike. So people that are worried about their crypto, I think, like I said last week was probably the best time to buy, or the week before, because the way this is looking today, I think there's a very high possibility that we'll get to 40, 42, 44K. Very high possibility that we'll get to 44K by Monday. If it continues at the rate at which the market is going, because it's looking like we've had attempts at breaking back downwards, but it has resulted in higher highs as it were. So I think in terms of general analysis, the worst might be over for now. This was, I think this was, which day was that? 14th. Today's roll by so fast. So on Tuesday was the 2 years anniversary of the the Black Thursday of crypto. And what happened on Black Thursday was, of course, the pandemic. That pandemic saw the market crash like crazy. And of course, a lot of people were scared. Some people felt Bitcoin was going to zero, but it was just an unusual scenario where nobody really know what to expect, and then people made a dash for cash, and as a result, risk asset like Bitcoin took the hit in terms of price. But I know somebody that became a millionaire on the back of that crash. The guy had been in crypto since 2013. Made a lot of money in 2017, got hacked and lost a lot of the money. Then, so resigned his job the year before the pandemic. Then that crash happened. Then he went all in on Bitcoin. The rest, they say, is history. So times like that provide, very unique opportunities. And I think we'll see what we're seeing right now is another time like that, even though it doesn't appear like it, because everybody's scared. There is war. There is potential famine. In another few months, there will be famine if this war doesn't stop now. The reason being, Ukraine and Russia are they're in the top 5 producers of grains, like wheat, especially. And Ukraine's highest supply of wheat is to Africa. So we better start planting our own wheat, or planting cassava, start eating cassava bread, because really and truly, those guys are not able to farm, for obvious reasons. So there's a lot of instability in the markets generally. And on top of that, the price of Bitcoin is still holding steady, relatively steady, to be honest. If this was 2013, the price would have probably gone to like $10 or something. So the fact that it's holding steady means that there is serious buying pressure that is below what is available on the exchanges. So people need to be mindful. If you remember last week, I said last week was the time to buy altcoins again. And the reason being that many of them will not be at those prices that they were last week. Just because once Bitcoin starts going up, the valuation of everything starts going up. And this war will end, and the market will try to recover. Government will still need to print money, regardless of all the rate hike that we're talking about. There'll be more money printing. So the market is going to rise. I thought to bring up this just so for people in UK to understand that when market makers or the big banks are saying something, it's best to observe what they are doing, not what they are saying, because usually what they're doing is that, how do I put it? What they're doing does not agree with what they're saying. So usually what they're doing is in complete opposite of what they're saying. HSBC is one of the most vocal banks against crypto in the UK, to the extent that, I mean, them and Barclays, to the extent that they send their customers messages. Here is HSBC now investing heavily in metaverse. If I was so angry, like I didn't read the story, I was like, this is just crap. The same thing happened with JP Morgan back in 2017, 2018. They were telling people not to buy Bitcoin. In fact, the MD then was that if he sees any one of his traders getting involved in trading Bitcoin, I was going to get a sack. Meanwhile, that same weekend, JP Morgan traders were buying the dip like crazy in London. So it's important many a times to look beyond, the narrative and the news and understand that these guys are not, they're in for their own pockets, and they'll do everything to take attention away from what is really going on. And I think that's part of probably what's going on right now. The banks are loading up on this, on these cryptos. The next thing you see is the whole crypto market doubles in valuation, and it becomes unreachable for the common man. This is a short news about Clearbank. For people who don't know Clearbank is almost like a shadow bank. You can Google them. They provide a lot of landing for crypto organizations in the UK and in Europe. Many of these finance apps or fintech apps in the UK and Europe use Clearbank, and the reason is that Clearbank has a lot of liquidity and a lot of deep-rooted connections with the main banks. So Barclays, JP Morgan, Chase, Goldman Sachs, HSBC, Royal Bank of Scotland, Lloyds, all those guys. I don't know what the connection is, but apparently Clearbank is very much in cahoots with them. As a result, they are really, really huge. Like, I mean, for them to be seeking 229 million in expansion means that a new business opportunity has opened for them. But they're really huge in off-ramp, even though they're behind the scenes. So if you off-ramping, I mean, back in the days in 2019, there was a company called, I can't remember the name of that company. It's a global company, but their clearing partner in the UK was Clearbank. Same thing, Swissborg is Clearbank. I think, what's his name? What's the name of this? Skrill is Clearbank. So many of these guys, really use Clearbank, and it's very easy. You can just get your online account just like that. So I think something huge is coming in this space for them to be seeking that kind of funding. I've talked about the interest rates, and I've talked about the ETFs. There was an interesting argument that happened in Capitol Hill this week. A particular Democratic senator was seeking to get a, how do I put it now, a ban on Bitcoin. I mean, it was Elizabeth Warren, but I mean, there was a lot of ignorance on display in that. I listened to some of the questioning episode. There was a lot of ignorance on display there because the senator was asking the guy a question. The guy was supposed to be the expert who was the CEO of a blockchain company. And the guy was trying to explain to the woman that, no, you can't just move $1 billion on blockchain and you will not be caught. That is not possible. And, apparently what had happened was, the way senators work, the assistants will have given them the points and written down the notes about those points for them to ask a question on. And the guy was trying to explain to the woman, and I was looking at the woman like, come on, man, you are talking rubbish. The guy is trying to put you in proper perspective. You are not listening. It's almost like a lawyer that is trying to interrogate what's it called, a witness, and wants to draw out his own inferences or wants to draw out an inference for the jury. So as a result, he wants a tailor-made answer so that it can line up. But the guy was trying to give context that you can't just move billions of dollars on blockchain like that without anybody knowing. And you will need to off-ramp. But obviously, I mean, it was pursuing a different narrative. It all sounded very weird, when people are talking in blatant ignorance and they're very, very strongly opinionated about it. I found it very, very, very disheartening. Well, I think I've come to the conclusion that politicians of everywhere are the same. They're just better than a bit better than themselves here and there. But after all, the politicians, it's terrible. Anyways, that's about that. I wanted to cover our news today. As I said, it's going to be a very short session today. I'm not feeling too well, feeling very tired, and I've had a very busy week. Please pray for the people in Ukraine. It's I think it's a very serious long group for them. In terms of our vital signs today, let me just talk about. I'll talk through the market capitalization. So, very interesting story that we have here. So, to explain what the chart is saying, at the beginning of the week, the total valuation was $1.635 trillion. Total valuation of the crypto market cap. Back in November, it was at 3 trillion. And back in July last year, May, June, it was at 2.58 trillion. Why are those figures important? I'm just going to show you something a bit. This is important because going by the market structure that this chart is painting, it is suggesting that, let me drag this out a bit for visibility. It is suggesting that this market in the next, well, I can't say what time it will be, but we're going to get to 3.8 trillion anytime soon. In terms of how many weeks we have left in 2020, let me see. We're not halfway yet, but again, from where we are, if we were to draw a parallel to the end of the year, it gives us 273 days and 120% from where we are. So somewhere around here, okay, 100%. Yeah, I think that's pretty decent. Somewhere around here is where, in the near term, the market is expected to go, because usually the market moves in ebbs and flow, just like for people who are in science class, that's frequency charts where you have amplitudes of things going up and down. So that's exactly the way the market moves. And because we didn't come down as low as we were back in May, June last year, we are more likely, based on this outlook, very more likely to show up somewhere around here over the course of the year, probably early next year or during this year, but definitely this is the chart. I mean, this is the way the chart looks. Another way to look at it, so there's something called Fibonacci retracement, which is what I'm using now to sort of derive where this is going based on data from the Black Thursday of 2020. So if we took that day, Black Thursday of 2020, as the lowest low in recent times, what it means is that we are pretty much halfway. Yeah, we're pretty much halfway in that journey. So if we took that as the lowest low, that would take us to, definitely that would take us to 4.2 trillion, which is still very much in line actually with what's going on here. If we took this, where is the second one? Hold on a second. If we took this as our recent high, which is the 3.0 trillion that we had in November, that will give us, oh, that's even higher. That's even higher actually. But I know it sounds all crazy, but really, it doesn't take so much more anymore to move the market, because the market's already heavily capitalized, and you don't have as much Bitcoin. So it's just to take a very small amount of money to move the market significantly, especially if Bitcoin dominance. Oh, sorry, I'm looking for Bitcoin dominance. Is this? Yeah. especially if Bitcoin dominance is going higher. Right now, it's coming down, which suggests that altcoins might be gearing up to pump. But if Bitcoin dominance goes up with the way the chart is playing out right now, where is this stuff now? Okay. With the way the chart is playing up right now, then it's inevitable that I don't know where my chart is. Enemy action. Anyways, it's inevitable. Okay, sorry, I was on overall market cap. I've not gotten to Bitcoin. Sorry. Anyway, so in terms of overall market cap, the least that can happen this year is to go back to 3 trillion, which is what it was last November. But because each trough has produced a higher high, so this was just as an example, this was a trough here in March of last year, produces this long rally that led us all the way up to 2.5 trillion from 103 billion. Just think about it for a second. Think about it for a second. From 100 billion, the overall market cap of Bitcoin as at the end of that week in 2020, when the pandemic was announced, till May last year, that's how many X is that? 25X. So the overall market cap did a 25X, pulled back by almost half, then did a double. So it's pulled back again now to pretty much 1.5. So the double of 1.5 is at the minimum 3. So the minimum to go is this level. But if we go by the same rule, which is the length of the previous impulse, if you apply that, it means you're going to have. Let me just show you what I'm talking about. What is that stuff? Price range. So if we take the length of this impulse, just to show some basic charting, and then apply it to this, at the minimum, you're going to see 3.35 trillion. I mean, just based on what you call the measured move. And these are the things that institutional investors look at to make investments into the market. So there are people that are sitting on the sideline just because, they are sitting on trillions in their portfolio and they're looking at the whole market, and the whole market is still just over 1 trillion. So the market is still small for some players. By the way, when the Emiratis and the Middle Easterners starts to play in this market, we're going to see a different ball game altogether. Same thing with the alt market capitalization as well. That too was around 1.7 in November. Now it's at 1. But an interesting pattern that I wanted to point out actually was the fact that I think that pattern is on the daily chart. We're having a market structure that's playing out what is called a double bottom. So you can see this one really looks like a double bottom. Can see this one, I mean, where's the brush? So here, having something like this is a universal sign of reversal or change in market direction. So this pattern showing up on the overall market cap is an indication that the market is ready to take in some money. And I can't remember when I drew this trend line. It's been a long while. Now that trend line is broken. If it sustains this into the coming weeks, then we're going to have a very interesting April. Definitely. April, May, June. If we sustain it, because all this while, what's been hanging over everybody's head was the interest rates. Some people said it was going to be 5 basis points. Some people said 2.5. Now they've shown their hands, so everybody knows what to expect. And in fairness, I don't think the market was not taken aback, to be honest. I was on the Forex chart as well. Many of the what's it called? This is Euro USD. Yeah, it looked like it was already priced in. Exactly. I mean, it looked like that interest rate was already priced in. It just had a small wick down, and that was it. So in terms of Bitcoin itself, You remember this, if you are here last week, you remember this drawing that I made. And it's quite messy, but I will explain it in a simple manner to sort of untangle the mess. So let me hide some of the indicators and stuff to make it a bit clearer. Yeah. Okay, so all the lines that are slanting are mostly trend lines, just to determine where the market is going. This that I drew last week was my expectation of the market structure. And I was saying that against the backdrop that we were forming a giant ascending triangle structure. And when you have that kind of market structure on a very high level, meaning on a very high time frame, it's very, very significant. It usually means a lot, to put it mildly. So what's been happening is if you drew a line across the close, especially, it looked like we're forming a giant ascending triangle, because here you see the market has been going, the lows have been getting higher, and here we've topped out like 4 or 5 times. So what I was saying last week was that I expect that, let me put it this way. I expect that this whole structure will break out at some point. I don't think it will break out at this point, because that will be, at this point, because that will be like 22nd of March or 19th of March. I don't think that's too close. So even if it gets here, what I'm saying is we'll need to flip 44 and even 45K for this move to be taken serious. My expectation is that, yeah, we'll probably get a move like this. Let me drag this, probably like this, and probably like this. So that this was what I drew last week. That's at the most we'll have 1, 2, 3, 4, 5, and boom. Or Bitcoin is in the habit of getting out before the pattern plays out. So it might just do one leg up, another leg down, then blast off. But I think that move is coming very soon, because all the things that are holding it down, essentially, we've taken care of, has been taken care of by the markets. So the Ukraine war, the interest rates, inflation, all the stuff that can be thrown at the price action has already been thrown at it. So I think, okay, I know that, okay, that's probably why this thing wasn't showing. Yeah. Please give me a second. I need to hide all this. Yeah, I was wondering why the chat was looking muddled up. Anyways. So yeah, this was what I was looking for originally. What this means is I'm trying to say that this pattern we are seeing here looks like what happened here. What happened here was we hit a bottom last year, June. And I remember on the 21st, is it 21st? On 21st or 25th of June, I said, I don't think Bitcoin is going to do lower than this particular stuff. And when it got here and came back up, I did announce then on 23rd of July that we were done with, the bear market. And that's exactly what happened. It broke out of the recent high, which was 40K. Interesting, or 41K at the time. Went all the way to 42, retested for 37, and then blasted up until we got to September before we took another correction. So my thinking is, yeah, I think we're going to blast off against 50K. So 50K should be around here. And the reason I think 50K will be a significant cluster is because this area was 50K. We didn't quite break back up from 50K after the plunge from 53K. So breaking 50K and stabilizing at 50K will be a confirmation that this low has been cemented, just like this was cemented. But I think, structurally speaking, I think this has been cemented, in my opinion, because, yeah, I remember I had this. Yeah, that's true. So I had this trend line. I've drawn this trend line since actually last year. I drew the trend line last year because I wanted to know when the trend line was going to be broken. We made some attempts at breaking it earlier on. That was when we got to 45K, but the market went back up and went back up. So now we made another attempt to break out of it. If we break out of it and it's sustained, which almost tied to the lower trend line. So market movement is usually in reaction to confluences. This is an example of a confluence because there's an ascending trend line and there's a long-term descending trend line that literally comes from April of 2021. So we've broken that trend line to the upside. We've been below that trend line essentially since the beginning of the year. So we've broken back up. We've spent 2 days now above that trend line again. If we keep at it and we don't come back down until mid next week, it will put us somewhere like here, which will still be above the trend line, even though it's 39K, it will still be above the trend line. So 2 options for Bitcoin. One is either we break out here and just go up straight and then sit at top 45K, or we break up to 44K, then take another support at around 39,500 or 40K. But because 40K has held quite stable in recent days, I'm thinking 40K might be the near bottom for some time to come. So in summary, what I'm saying is, I think market go up is about to happen. As I said earlier on, it might be the next 2 weeks, it might be next week, it might be the next 4 weeks. But going by this and going by what we've seen on the weekly charts, let me expand the weekly chart. What we've seen on the weekly charts, I think we're about to push up significantly. So I usually draw this trend line just to have an idea of when the market is making moves over them. So this trend line was the one I just showed you that said that was drawn from April last year. We've broken that trend line. We've broken another one that was before that. So now we have what you call a variation, or a variation or a reversal relationship right now. You have this pink candle that shows that the price open and close was very low. Then you have this big, what you call a bullish engulfing candle, meaning the price of the current week is way, way bigger than the price of the week previous week. If you see what happened here, that's exactly what happened here. This is a typical, let me look for, let me just draw. This is a typical bullish engulf, these 2 candles. Pardon my drawing. The green, these 2, and this green and why is it painting the whole place orange? Anyways, so this pink and green is a typical example of a bullish engulfing pattern, and it usually means that there's a trend reversal. The bearish engulfing is the opposite, which you have here, which means the current week is way bigger than, and usually least. I mean, every time you've seen a major reversal in the price of Bitcoin, if you check the charts, you can expect to see something like this. So for people who always want to find out, just go to TradingView. It's a cheap, there's a free version. If you have a look at the chart and you see a candle pattern like this, know that it's time to sell. If you have not already sold. For people, I mean, because I've had a lot of people ask me questions about, okay, how can we time the market? You can't time the market, but you can have an idea of what the market is about to do. I mean, that is not to say that, the market cannot flip on itself. So a good example is here. So if somebody sold here now on the back of the fact that you have this almost bearish engulfing as well, then almost 1, 2, 3, 4, 5 weeks later, you have another flip to the upside. So if you sold here, you have to buy back here. I mean, the difference is not too much. But when you see something like this and the next week after follows through, you know that, especially when you've been in a particular trend for a while, I think that's the context. That's the real context that makes it different. If you've been going up for a while and all of a sudden you see that kind of pattern, it shows that the market is about to make a U-turn in price action. So we've been seeing that. So we saw that here. It didn't succeed. We're seeing it again here. By the way, when you have this, they call it shooting stars, but it's almost like inverted hammers, two patterns. It's like a sign of reversal or an impending reversal. So you have 2 inverted hammers and you have these big bullish engulfing candle. I think next week is going to be very interesting, especially if we close this week above 42K. I think next week will be very, very interesting. That's my thesis on the price of Bitcoin for the coming week. I think even for the month, I think it's indicative to, yeah. Even for the months, we've seen that we're making a higher, significantly higher low. The low in January was 32K. The low in February was 34K. The low here is 36K. So if we continue at this rate, this monthly candle that is currently bearish will flip bullish. And in fact, might go above this and create a bullish engulfing on the monthly chart. A bullish engulfing on the monthly chart is a confirmed go. Like, it means that the market is ready to move. So that's all I have for today. I hope I've cleared some doubts in some people's minds. But it's still, as I said, I still expect an all-time high this year for the price of Bitcoin. Just on the basis of technical analysis. I expect that, yeah. And there is nothing else that can happen that's bad that has not happened already this year. And we still have this scenario going on with Bitcoin. So I think we're good in terms of price action. I don't know if anybody has any question. If you have questions on Instagram, just type in your question. I'll read it out and answer. If you have questions on the call, just unmute yourself. Interesting. Everybody seems to be all right. Anyways, can we alt season this year? Can we see alt season? Of course, alt season is usually on the back of for most time it's usually on the back of a Bitcoin pump. So to put it in context, let me put this on a weekly chart. No, daily it's better. If you see, I want to give you a context now. So let's say, okay, this is not a good one. Let's say here, which is 22nd of September 2021. 22nd of September 2021 was when the market started to pick up and was going up. If you check the same time period, where's my Bitcoin dominance chart? Same time period for Bitcoin dominance, 22nd of September. Here is where we are. So at the same time, 22nd of September here was when the price of the dominance of Bitcoin started going up. Now, when you check this dominance of Bitcoin versus the average price of altcoins, you notice that altcoins, when this is happening, altcoins are relatively stable. They might not move as much as expected because Bitcoin is making rapid moves during that same period of time. But if you look at 20th of October, which is when dominance started. So let's go to Ethereum for context. 20th of October. So you see 20th of October. Even though that was when Bitcoin gassed out, you can see Ethereum still made higher highs after that. And if you check, let's see. Oh, yeah, this is a good example. So this KNC is an altcoin that trades. This is a chart of KNC against Bitcoin. If you check the same time period, which is here, 20th of October was when KNC started to gain against Bitcoin. Just look at that dynamics. Around that period was when you started seeing the spike, then came down, started gaining, and it's been gaining significantly against Bitcoin. So what happens is when whales and big players move money from Bitcoin, in order not to shock the market too much, usually they move the money into altcoins. So what you need to watch out for is what is happening to Bitcoin dominance when the price of Bitcoin stops, or the price of Bitcoin has been moving for a while, then stops. As long as Bitcoin dominance, where is Bitcoin dominance again? As long as Bitcoin dominance is not going up, you can expect an alt season. As a matter of fact, the rule of thumb is that once Bitcoin dominance starts falling like this, then you're going to have a gain in alts. And you can see that the one we have last time, once we got to, I think this was November. November was when we got to the peak in terms of the price of Bitcoin. The dominance went up a bit. No, sorry. I'm looking at the wrong November. This is the November I wanted to look at. This November. Once it got to the peak, dominance of Bitcoin started to fall. And it fell all the way to January. If you check the same time period, you see that altcoins are mooning at that point in time. So yes, there will be altcoin season. And that's why I was talking about altcoins last week. A good number of altcoins are starting to show up on the radar again. Generally, I think KNC is a very strong one. I think Atom is a very strong one. I think Waves is a very strong one as well, because they've been showing some very massive moves against Bitcoin this year, which is very unusual. So I will be on the watch out for them. Please, what's the direction of the altcoin narrative that is gaming, metaverse, or layer one? Web3 is going to be very significant this year, as you already can imagine. Same thing with metaverse tokens. Just on the back of the fact that a lot of institutional players are playing in metaverse, NFT narrative is dying down a bit because the scam, I think, the noise of the scam has overwhelmed the real deal. So everybody's, and then this attack on what's the name of these guys? OpenSea. The hack of OpenSea also didn't install a lot of confidence with NFTs. But generally speaking, I think Web3 tokens are going to do well. I think Metaverse tokens are going to do well. For the guys in the subscription group, I've given you a number of tokens that I think you should buy, because I think they're going to do very well this year because of their positioning. And like I told somebody who was asking me, the most money I think is made in the alt season because, or in the bear market, pardon me, because in the bear market is when you have the alts that are cheap. And if you're the average person that is listening out on this program, you have your day job, so you don't really need to spend the crypto. The counsel, not a financial advice, of course, will be to dollar cost average, meaning to buy it at a cheaper cost now, so that when the price starts to appreciate, you benefit from price capital gains on both ends. I've explained dollar cost average last week, so I don't think I need to go into it again. But that's the strategy when the market pulls back. And again, if the market peaks, like I told somebody was disturbing me, I was like, oh, I wish I sold. I said, well, you have two options. You can sell when we get back to 69K and say, okay, yes, I've exited the market. But understand that in 4 years' time, you'll be asking yourself, oh, why did I sell? Because this is not going to go away. It's been here for 12 years. So it's not going to go away. It's only going to get bigger. And as Bitcoin gets bigger in terms of adoption, the whole crypto industry as a whole gets bigger. And everything that holds value in that industry will accrue value as well. So it's important to understand that, frankly speaking, this is the new real estate. I hope I've answered your question, Paul. If you don't have any other question, greetings to the guys on Instagram. I see Tush, I see IBK, I see Quinty Daniel, I see Omopolina, I see Real Alaka, and Omotayo. So thank you everyone for joining the program. Oh, there's Fash, there's Mr. Kieron, and NJ, and Tamori, and yeah, those are the guys I can see on Instagram. Have a nice evening, everyone. See you again next week. And enjoy your weekend. Bye.
Bye. Thank you.
Great Will of Wales.
Your sincerely, I always salute you.
Akin you.
Ìdọ̀bálẹ̀ làkọ́bá o.